I consider myself somewhat of a minimalist. I don't really like having a lot of stuff. I'm not a huge fan of clutter. I like to keep things clean and simple. You can even see that here through my phone. This is actually also my wallet. I don't carry around a big bulky wallet. And in this wallet I have right here would be my credit card. And on this credit card, I'm in well over $9,000 of credit card debt, and it's not because I bought a bunch of stuff. Actually, that sentence was highly misleading. I did buy a bunch of stuff, but it wasn't just a bunch of stuff that I could have for myself so I could enjoy those things because I wanted them, and I got into credit card debt because I couldn't afford them. It has to do with a property that I recently purchased. Back in April, I bought my first property using a second home loan. I own multiple properties, but this is my first property that I bought using a second home loan, and it's considered an owner-occupied loan. Although it's a second home, it's a vacation property, it's not a place that you stay in like your primary residence. So they allow you to put 10% down as long as you intend to occupy the property for a certain period of time. And this property is only about an hour away from me in Pinehurst, North Carolina, which is pretty much the golf capital of the world. They'll be hosting a bunch of US Opens there. The property's actually on the golf course, so it's a really good selling point because when I'm not staying there, I'm going to rent it out as a short-term rental. Before I get too deep into the story of why I'm in credit card debt, my name's Avery, and if you're new to the channel, I typically talk about personal finance and mainly about investing in real estate because that's what I'm extremely passionate about and I find very interesting. So if that sounds cool to you, I would really appreciate it if you would hit that like button. All of the properties that I've bought in the past have been owner-occupied properties. The first one I bought was a duplex house hack where I put 3.5% down. The second one was also a duplex house hack where I also put 3.5% down. And then the property that I'm currently living in was an owner-occupied single-family home that was a 5% down payment. So this property is technically an owner-occupied loan, but it's more closely related to an actual investment property where I'm not living there full-time for a year in order to then reap the benefits that real estate has to offer, like cash flow appreciation, tax benefits, and the like. And so the reason why I decided to get into a vacation rental property, Airbnb, short-term rental, VRBO, whatever you want to call it, is because I had this loan option available. I wasn't going to be moving again from this owner-occupied property to another one. It kind of really sucks to move a bunch, so I wanted to try to start doing less owner-occupied properties when it comes to investing in real estate. I decided on this area in North Carolina because it's pretty close to me. It's only about an hour 15 away. And because when you purchase a second home loan, it has to be a reasonable distance from the property that you currently reside in. And for some states, that may be a different amount of mileage away from your property. Other states, it just kind of has to make sense. Like even if it may be only a 45 or 30-minute drive away, but it's a massive vacation destination, that may make sense from the bank's perspective. Other states might say it has to be at least 60 miles away or 50 miles away or 70 or whatever it may be. So it depends on the area that you're looking to buy in. But that's why I decided to choose the area of Pinehurst because it's a massive vacation destination, as well as people are able to golf there year round, and there's hundreds of golf courses. The US Open is there, and overall the housing stock is extremely nice and it's very beautiful. When I was originally looking at buying an Airbnb down in Pinehurst, I didn't really want to go through the idea of doing a bunch of renovations, but like the insanely hot housing market that we've been in, if there's no renovations and it's move-in ready, then it's going to go for a lot over asking. And I actually got into multiple bidding wars on, I think it was 3 properties. One of them I ended up offering 30, 40K over asking, got completely outbid on that one. The next one, I realized the market that we were in, so I offered roughly, I think it was $46,000 over asking. And actually I had the higher offer price than someone else, but I think they saw that I was a second home loan investor and they didn't want to sell to me. They sold to someone who was just moving in. And then I decided, you know what, I am no longer going to look at move-in ready properties. It's something that I tell people not to do. I don't know why I was doing it. I thought it would just be easier because with Airbnb, not only do you have to focus on locating that property, but you have to furnish it, so there are a lot more things that go through it than just buying a long-term rental, which is what I was used to. And I wanted to make the process easier on me. But it wasn't going to be a very easy process if I couldn't find a property, so I decided to go back to my roots, find a property that needed some renovations, and then be able to rent it out on a short-term platform. So that's exactly what I did. I found a property listed at $399,000, offered $405,000 on it so I could just get it closed up right away in a beautiful location located right on a golf course, right on the fairway. Actually, the couple of times that I've now stayed there, you can see people golfing all day, which is obviously very cool for people who are coming from somewhere else to do a vacation, and they can sit on their back deck and enjoy people hitting the crap out of a golf ball and hopefully not hitting them while they're sitting there enjoying their morning coffee or an afternoon beverage. So with $405,000, I also got a $5,000 closing credit, but because it's a 10% home loan, it was $40,500 for a down payment. And second home loans at the beginning of 2022 changed the stipulations for closing costs and other things like that. So they're more in tune with investment properties when it comes to closing costs, which are not nearly as friendly as an owner-occupied loan. So I also had roughly $15,000 in closing costs, and that was inclusive of the $5,000 credit that I received. So that was roughly $55,000 just to get the property. And then also I had a pretty big renovation ahead, which ended up costing a decent amount of money. I think it was $45,000 in total. And I'm gonna do a total breakdown of all of the costs of that renovation in a different video, not in this one. I'm also gonna do a property tour of the property because it's so amazingly beautiful. It's way better than the house that I live in. Honestly wish that I lived there. It's pretty much a dream home for me, so I think people will be really excited about renting it out. But the last part of Airbnb that makes things take a lot longer and makes things more costly, but hopefully pays off in the long run, is you have to pay for furniture. So I had that down payment and I had the money to put together the renovation. I was able to sell some stocks, cryptocurrency, other assets that I was holding, and also was getting more and more money in. So I was able to pay off that renovation and obviously acquire the property. But when it came to that furniture budget, I was feeling a little bit tight. So this is where this credit card comes into play. This is a Chase Freedom Unlimited credit card. It's actually a pretty cool credit card. Not gonna do a review on it right now, but once you're able to spend $500 using this credit card, you're gonna get $200 in cash back. I'm also part of the Chase ecosystem, so that $200 is now 20,000 points. And that's why I really like this credit card. And the other reason why I really like this credit card is because when you sign up for it and you're starting to use it and you're in your first 15 months, you have 0% APR, which means if I hold a balance on this credit card, I'm not accruing any interest. I don't have that high interest debt, and the debt that I take on is just pretty much a 0% loan for me for a while. And although I'm currently in $9,500 of credit card debt, I was given a $23,000 limit for this specific credit card. So my utilization, also adding up my other credit cards, is still below that 30% threshold. So it shouldn't affect my credit score very much, which if you're new to the credit card world or trying to build your credit score, keep that credit utilization very low as possible, so banks know that you're good at using money and will want to lend to you, and you can get the best interest rates for the properties that you're trying to buy. And so I actually do have that money to be able to pay off this credit card, but I figured might as well not, because I can just pay that minimum payment, which will be about $40 a month. The Airbnb will actually start bringing me in money, and then I can pay off that credit card a little bit easier rather than feeling a little bit more strapped. Right now I have a pretty strong emergency fund. I'm able to pay the mortgage when it comes up, and I'm also able to spend on anything else that might go wrong with the property. But with all of the renovations and all of the things that I fixed, it's likely that there's going to be very little maintenance expenses just because I've pretty much fixed everything up until this point. Overall, I 100% do not condone getting into credit card debt. You do not need to go out there and buy stuff with money you do not have. Overall, you should be using a credit card so you can get points, rewards, and all of those important things. And you should only be spending on money that you already have in your bank account. Technically, which I'm doing, but I'm just using some other type of leverage in debt because I can keep my other money safe and not need to pay off this credit card because I have a 0% interest loan for 15 months. And I feel pretty strongly about my financial situation and not needing to pay it off right now. And I do think this is a pretty good idea if you're able to get into Airbnb, because with long-term rentals, it is pretty difficult to pay for a contract or pay for renovations with a credit card. Usually doesn't work like that, but with furniture, because you're buying from Target, Amazon, Walmart, whatever it may be, you're able to buy stuff with a credit card, and if you can get a 0% interest loan, I figured, why not? So you may or may not view this as a hack. I think it's very good to be able to leverage debt wisely if you can, and in my opinion, using this 0% APR credit card for the first 15 months is a great use of leverage because I know I could pay it off today if I absolutely had to, but I also don't need to, and I have 15 months while still making the minimum payment, not affecting my credit score because I'm keeping the utilization low enough as well, and I'm going to be able to be freed up with the money that I have just in case I ever need it. So it's really not a big deal, and I think it's a very smart use of debt. Hopefully you guys like that video. I've definitely been a little bit slower when it comes to my YouTube lately. I make a lot of videos on TikTok and Instagram if you're interested in checking those out. make sure you check them out because I do post roughly one a day for those platforms. But with YouTube, things have definitely been a little bit harder, a little bit slower, just because of a lot of the stuff that I've been having going on the Airbnb. Spending a lot of time researching what furniture to buy. Mia, my girlfriend, has been a massive help with all of the decor and finding furniture, stuff on Facebook Marketplace. She actually even found this chandelier that normally retails for $3,000 for 250 bucks that was used on Facebook Marketplace. So another great tip, other than being able to utilize leverage well, is have a significant other who can do those kind of things for you and is good at decor and also figuring out what renovations actually make the space look pretty. But I'm trying to make more YouTube videos because this was the very first platform that I started on. I really like making YouTube videos. I find that people can actually learn more. There's a better connection between me and the audience rather than just making those short form videos. Although those have been helpful for growing my audience, and that's why I've focused on them a lot. And YouTube's been a bit of a weird growth for me because I ended up taking off quite quickly because I had that one video that did really well that many of you subscribing may have watched. But I've just been consistently making or trying to make one video a week for the last while. The last couple of weeks since I bought this property has gone off a little bit. But if you guys are interested in hearing more about Airbnb, put those in the comments below. If you have other questions about Airbnb, make sure you put those in the comments below. If not, I'll go back to talking about different types of content. Hopefully you guys liked that video, and if you did, make sure you tap that like button and don't forget to subscribe and hit that notification bell so you get notified when I make more videos like this. And again, don't forget to check me out on TikTok as well as Instagram, where I make a lot of similar videos as well. I typically upload them to YouTube Shorts too, so you can check them out here as well. And if you're interested in claiming some free stocks, go ahead, check the link in the description below for Mumu. I have spent almost $100,000 or about $100,000 on this property, so I could use some of that affiliate marketing money. Would really appreciate it. You get some free stocks, you help out the channel, aka me, and so I would very much appreciate that. So thanks again for watching, and more wealth is coming your way.